Hey guys, we'll get started here just in a second. Good afternoon. Good afternoon. It is Taco Tuesday. How many of you guys are excited about that? I know I am. Hey, what's up, Mirza? How are you? We'll get started here in a second. Just working out a couple details here. Put a little countdown here. All right, so we'll give us about 2.5 more minutes and then we'll get started. But anyways, guys, thanks for checking me out. I'll be talking about, my approach to my methodology and kind of teach you guys some of the stuff that I know. I also put some scratch pad over here to the right. So if you guys want, just copy and paste that or take a picture of that, kind of help you out. And, if you have questions, please leave those to the point where if I ask, definitely get involved, ask some questions because I love teaching, and I can't wait to share some of this stuff with you guys. So how's everybody doing? How are you guys? How was your trading today? We had some amazing trades over in the options room, right? So got you guys prepped. We did some J&J, made about a 80 plus percent there this morning. And then Cody with some amazing credit spreads right into a supply zone, which was perfect. You guys collected on that. And Sam had the great timing of the SPY puts, right? So it was like triple, right? Trifecta. It was really cool to see everybody kind of come together and have some amazing trades this morning. All right, guys. So I think we got everything going here. So I'll go ahead and start. And basically, we're going to start with this screen. So right here, we're looking at Apple, but I'm not going to dive into Apple. First, I want to kind of tell you a little bit about myself. So my name is John, known as Trendy Jon. And we'll get into that here in a few minutes, what Trendy stands for. You can also see it over here on the right-hand side of my screen. It's actually an acronym. My mom didn't name me that. My dad didn't name me that. But we kind of just came up with that name over the years. I am a professional supply and demand trader. The reason why I say professional is because this is what I do for a living. Also, I obtained a certificate of supply and demand trading through Online Trading Academy years and years ago. It's a pretty cool story. So, to make it short, I was in the Air Force for about 21 years. Okay. And on my last assignment, I didn't have a whole lot to do. And I spent many years on the side learning trading. But just like anybody else, I started by watching traders and honestly, I looked at the wrong places to go. I pretty much was looking at who's the most popular, who's followed the most. And I would take advice just from random strangers. And I found myself losing all of the time. And honestly, it got really bad. And I was at dinner one night and I was sitting down with my wife and her side of the fam, and they had some friends in. And one of the gentlemen, he said, John, have you ever heard about supply and demand trading? And I said, no. And he said, well, I tell you what, it'll open up your eyes. Come to find out, they actually took the GI Bill. So I used my GI Bill, which is, basically like a scholarship that I earned. And I paid for those services. And I have to tell you, I give a lot of credit to the idea of I learned how to think like an institution. And so that's where I really have really honed in on my skills is to actually think differently. I'm going to show you how to identify zones and all that great stuff and how to trade zones and how to come up with targets and all these really neat things that are a great tool to your trading. But I want you to understand as a disclaimer, no matter how amazing we create a chart and how amazing those trades can turn out, trading is not easy. I promise you that. Trading will always be difficult. The one key element to this, after you learn how to identify these zones, how to trade, and put all this stuff together, is allocation. Allocation is one of the most important things I've learned through my entire journey, because no matter what, if I'm comfortable with the risk that I put on, whether it's intraday or I'm going home at night with it, I have to tell you, it just makes it that much more comfortable. Okay. It just makes it that much more comfortable because I can go to sleep at night understanding, hey, if I lose X amount, I'll be okay. All right. Now, the next thing I want to tell you is the school of hard knocks. Everybody's heard about that. So it took a lot of losing for me to really appreciate technical analysis. I'm going to be straight up with you. I used to make fun of technical analysis because I just sat around guessing. Oh, well, I was this type of trader years and years ago. I'd walk through the mall, see an Apple store, and say, hey, it's Christmas time. The lines are out the door. It must be an event to buy calls. I would go home and buy calls. Anybody ever do that? I mean, seriously, in the beginning, I was just a mess. So, guess what? I had to hit rock bottom. I had to really get my stuff together. I lost a lot of money. And then I said, you know what? After I put all the information together and I learned to think like an institution, then I hit the drawing board. I found out some really amazing stuff, and you don't have to make it that difficult. I found that trading the zones and identifying those zones were really pretty easy to do, to be honest with you. So once I identified those zones, then I started to realize in order to be the best trader, I had to use multiple time frames. That's not the easiest thing to do when you first start out, is it? Because it boggles the mind. It's like, well, I just want to like scalp a trade. But believe it or not, even in scalping, you have to understand on the higher time frame if you're scalping right into resistance or support. Don't you want to know those type of things? And if you're going short, you want to know where to get long. And if you want to go long, you got to understand where people want to get short. And supply and demand trading does all of that for you. Matter of fact, I'm very, very confident in the levels that I provide for you. What is really neat about this, and you'll see this through the next several sessions, is that we can indeed show you where price is going to go by using these zones and using this methodology. Believe it or not, news is just a catalyst that pushes price into zones. This is something that I believe is phenomenal. And traders who have been following me for many, many years now, they understand what I'm saying. So we don't rely on news to trade. We just rely on news to push price into one of our targets. So moving on down, my style of trading includes options, to include swing, leaps, intraday, and scalps. And I'll sell naked. I'll do spreads, butterflies. I do all of that. Equity, I primarily use when the IV is too high. The reason why is because I just don't want to see my premium get burned. Now, we could also sell credit, but I just want you to know I also sell equity. Matter of fact, we shorted Apple this morning, first thing before the market opened. Okay. Futures. I love futures. Matter of fact, we have a very straightforward process that we use. I'll go over that as well. And I primarily trade futures when I'm teaching or I'm just simply hedging. Okay. Now let's talk about what trendy stands for, because you'll hear me say trendy methodology and so forth. The T stands for trend. Okay. We're always paying attention to the overall trend. For example, if you look here on the left hand side, you'll see that Apple is trending with higher lows and lower highs. That means right now, Apple on a bigger time frame is trading sideways. Okay. Range. That's what the R stands for. I am a range trader. So what I like to do is I like to pick out ranges and then I find zones within those ranges. We identify those and then we trade them. The three in trendy stands for 3 to 1. Everybody's looking for a three reward and a one risk. We have found a recipe to do that on my intraday trading, and I'll show you what that looks like here in a few minutes. And this one's huge. This one, I have to tell you, my wife and I stopped watching news. We literally do not have any sort of TV cable that would even give us news in this house. And we've been doing this for almost a decade. News for me is just it almost feels like a device to keep me from pulling the trigger. If someone were to tell me that, over here on this news channel, they said this about Apple, and this is the reason why it's going to go down, I would miss a lot of opportunities and I would buy into that Kool-Aid, right? And I would then look to go short. And then before you know it, price, pushes up and you don't really understand why. Okay. I just can't use news. And I can show you that the zones that I provide to you work before news. D stands for demand and supply, right? That's what I like to do. That's how I like to trade. And I'll kind of show you how we trade around that. The Y stands for you. I used to say you and yield, like how much will your position yield for you? But I really like the you part. And right now, here in the room, we're talking about the psychology portion, right? So P.net, J. Russ, Matt, all of you guys are talking about Mark Douglas. Even though I didn't personally know Mark Douglas, this is actually pretty funny. I say that over the last several years, I've spent more time with Mark listening to his YouTube than I do here at the house, like around my wife, around my kids. I really had to dial in. And whether I was mowing the yard or I was working around the house or I was driving down the road, guys, you can't get enough of Mark Douglas. I mean, you really can't. Okay. You have to have him on repeat. If you don't, you're missing out. You have to start thinking like this man. The psychology is the second key. Allocation for me is first, psychology is next. You have to have your mind right. Okay. So, moving on. This is how I like to look at the market. And I want to just kind of go over this with you. And we're going to break it down to multiple time frames. So, a few things here, folks. I have a few videos out here how to do this. So, if you don't know how to do this, that's okay. But if you're using Thinkorswim, I highly encourage you to watch this 3-minute video that I have out there. And it teaches you how to do this. This is so that we don't have to wait for something to populate and so forth. So what you do is you put your favorite time frames on there, okay? So right now, folks, I have this on a monthly. And really quick, let's talk about supply and demand, okay? Now, what does supply and demand mean? Does anybody know? If you don't know, I'll try to make it as quick and painless as possible. Supply and demand has been around since the beginning or the inception of the market. The idea here, folks, is that when supply outweighs demand, the prices pull back into where price discovery knows that people are willing to buy. I want you to think about this from an institutional standpoint. This was the first thing I ever listened to that actually made the hair on my arm stand up because I was lost, folks. And if you're lost, I want you to find your way by at least introducing this tool into your trading. Just like the beach. And I say this because I live in Florida, I live on the water, and we spend a lot of time on the beach. Just like the beach, when people walk on the sand, they leave footprints. The heavier the person, the deeper the footprint. Folks, this is your beach right here. These are the footprints. Each one of these candles are a footprint. Are you following me? Are you understanding? These are the footprints on the sand. Okay. Now, watch this. The bigger candles mean bigger demand. Okay. If you look across this blueprint or on the sand here, you will see that we have some light stepping. Okay. Those don't really do a whole lot if you notice. But once we start to get a little bit more, a bigger size, heavier footprints, the market starts to react. My job as a supply and demand trader is to teach you how to find these formations that create supply and demand. And we do that by looking for certain structures. Now, I coin them as inside and up and inside and down formations. Okay. So, for example, I'll show you right here. We have a zone. This is an inside and up formation. Okay. And up here, we have an inside and down formation, which is right here. Okay. The idea here is to wait for price to come back. It doesn't have to touch the zone exactly. And I'm just doing this really quick to show you guys. But we look to go long here. And then we look as price rises into supply to start to think about being cautious. So we lay off, we start to trim, we start to pull our stops up. Now this is on a monthly time frame. So for my swing traders, I am identifying zones by using monthly time frames, okay? Especially for swing. And we actually use quarterly and yearly structure to trade leaps. And currently I am in some leaps. Okay. We've done really well this year. I traded gold. I bought on the dips into the zones. And then we started to trim as we pushed up. We were there before the masses. I also did this with Google. I did this with Amazon. I did this with Tesla at 1000% on my long term options, guys. 1000% on long term options just by identifying zones. Okay. Now, the benefit of this is that each time frame looks different. Okay. Now, watch this really quick. So, old school, if you don't have this on, what you would have to do is you come over here and you have to change this into, and you have to wait, right? Thinkorswim is thinking and it's waiting, and then boom, it pops up. So, on a weekly time frame, things will look different, folks. We look up and to the left, we look for structure, and my inside and down zone would be right here. Okay. So things start to look different. All right. And I'm going to make these different colors for you guys just really quick. All right. So this is on the weekly. Let's duplicate this and let's find the inside and up formation down here. We're going to move this down. This is going to be your weekly zone right here. Okay. Now, the idea here is as price gets closer to the weekly, we want to stall, right? We want to bring stops up. And from a weekly standpoint, we want to start going long here. Now, this is where this really starts to come in handy. Notice as I click this arrow and I come over here and I hit auto, boom. Now we're on a daily. This is the daily. Okay. Now the same thing. I can look down and to the left and look for formations. Matter of fact, right here was your daily inside and up. Notice that price came right into this formation. This is where we look to go long. And then we could find daily supply over here, or we can use our weekly zone, or we could use our monthly zone. It's up to you. Now you're going to see a lot of dashes on my platform, and I'll get to that here in a second. Let's go ahead and hit this arrow one more time. And notice now we are in a 4-hour chart. Okay. Notice how fast that was. Matter of fact, let me just make sure this is a 3-hour. We were doing some education earlier. Let's go over here and go to yeah, let's go to 4-hour and put this in here right there. We'll just kind of wait for this to load. All right, so there's the 4-hour. So again, you guys don't have to have a 4-hour, but these are some of my favorites. So I like on this particular setup, I like to go from weekly to daily to 4-hour to 5-minute. Okay. Now, but I'll look at all sorts of different time frames. Now on a 4-hour, we could come down here. Notice that we have an inside and up formation. Boom, there it is. 4-hour inside and down is possibly right in here. So your zones, what happens, guys, is that you start to basically drill down. And if you notice, your zones start to look different. Do you guys understand what I'm saying? All right. So every time frame is different. Now, to think like an institution, I don't necessarily want you to think, hey, wait a minute. So what about a 5-minute? Like, are institutions buying on 5-minute charts? You know, I don't think so. The theory, the idea here is that they don't. But you could still use the formations to kind of help you out. All right. Everybody understand that? So if we come over here, all right, and we take a look at all that stuff, what I'll tell you is when I went back to the drawing board, okay, I went back to the drawing board, and I'm not going to lie to you, to go into all these different time frames and find all these different zones and to do all this sort of stuff, it was time consuming. Everybody understand that indicators, right, are just a tool, okay? I like to teach you the old school way. I want you to take the time. I want you to appreciate what you're doing. I want you to be able to look at a chart and I want you to map it out, just like I was showing you. Okay. Now, not all zones are created equal. And I'm not going to go into great detail. I only have 30 minutes with you guys. For me to teach you everything I know in 30 minutes could be pretty difficult. But what I do want to do is give you an insight of my methodology. During this time, and after I think about a year and a half of really dialing in and understanding the methodology, I thought to myself, there's got to be an easier possible way to do this. And there was. It really wasn't that difficult to do. So I want to go over with you guys just a few things here really quick. We're going to minimize this. We're going to minimize this. Okay. We're going to come over here like this. And I want you to understand that I like to use my methodology, but I also like to get there quickly. Okay. So every morning that I come into the day, I know where my zones are because I have programmed them to show up here. I have upper levels and I have lower levels. Now, what's really neat, if you look at the screen as we zoom in here, you're going to see that each one of these are a different color. Does everybody see that? On this time frame, we have purple and blue, right? And if I come over here, we have yellow and we have orange. You guys can see that, right? Now, notice over here, I'm going to freeze the screen. We have orange, we have yellow, we have pink, and we have blue. These are the only zones that I have on the chart. Now, what does this mean? Every one of you are different. This means that not all of us are created equally, are we? Not everybody wants to sit in a trade for 3 months with me. Not everybody wants to get in and out every 10 minutes because you got a job to do, right? So what I've done is I have automated zones to pop up on daily levels, weekly levels, monthly levels, and yearly levels. Okay. The orange is for my intraday traders and or scalp traders. Expected range or time for your trades to work out are anywhere from 30 minutes to a couple hours, maybe even 5 minutes. The yellow, these are our weeklies. We're looking to be right somewhere between 1 and 4 days, 1 to 5 days. Over here on the monthly, we're looking to be right anywhere from 1 month to 3 months. And on a yearly, these are for my lead traders. Okay. And again, these are identifying the zones. That's all. So for example, if I wanted to come over and short something today, I would have came over to this name right here. This is Meta. Okay. And what it's telling me is saying, hey, John, we're coming up into an upper edge. Look to go short. Okay. If it says lower, then I'm looking to go long. All right. Now, check this out. Tesla. Okay. Just to give you a couple examples here, really quick. These get me there really fast, guys. All right. That's all I'm saying. I'm trying to get there really quick. I don't want to have to go and look. So the idea here is you see this yellow and yellow. I'm looking to go short here. I'm looking to go long here. And when we are in between, I'm doing nothing. My biggest thing is about patience, process, patience, profits. And the profits are not guaranteed. Okay. Now, I know what you're thinking. I know what you're thinking. Isn't it easy to buy low and sell high? No, it's not. And I'll show you a demonstration here in a second. But before I do that, I also want to show you really fast, and we'll go back to Apple. We can go to any name you'd like. All right. So if we come over here to Apple and we take a quick look and we go to a 5-minute chart, this is called the PMZ. This is my most popular indicator. It's a pre-market zone. Future traders love this. Equity traders love it. Option traders love it. And the reason why I say that is because every morning it pops up 5 minutes before the close. We look at the overall trend. My banners tell you what the trend are. Okay. We try to follow the trend. So if the trend is down, I don't necessarily want to be, trying to go long. If it's up, then I don't necessarily want to, short and those kind of things. However, it's very mechanical. We look to go long on a close over and we look to go short on a close under. That's the conservative approach. Some people just go short right away or go long. It also tells you what your risk is. Today's risk is 11 cents. These automated levels give you your reward. So, for example, I went short here this morning and we covered down here. And if you come over here, these are tied into my API. Okay. So they come straight from the API into here. This is our trade over here at Simpler, 74% on those, some BA trades. But I was able to trade Apple to the downside, and you could see I was trimming, and we made about $1 something by the time I was finished with this particular trade, just using the levels. Okay. So that's an intraday approach, right? Just a really quick approach. So I have something that I've combined all of this knowledge. It took me many years, guys, by the way, to put all this together to make it a little bit easier for you to understand. Okay. So before I end the session and ask you guys questions, I want to leave you with this demonstration. And I hope that somehow it doesn't offend anybody, but it also really touches you and makes you understand how the market works. Are you ready? So supply zones, when we identify them, are up here. The demand zones are to the downside. Now, it's really easy in hindsight for you to think, okay, well, we go long in the green and we go short in the red. I want you to understand that we identify the zones before price gets there. Okay? Before price gets there. Please understand this. When prices fall, what do you think is happening in the news? What do you guys think that is happening in the news when prices are falling? Let me get some answers really quick. What do you think's going on? Bad news, fear. They're inducing fear into the market. We are retail traders. I am no different than you. The only thing is, I'm a wannabe. I want to be on the same side as an institution. When price gets down into demand zones, they will put so much fear in you, you will be scared to buy the dip. What happens is traders like me, we look for key details, looking at the TTM Squeeze Pro and a couple other nice things here. We get long. We have a strategy to get long. And this is about what happens. Traders for about right here decide, hey, I'm getting confirmation. It's okay. I'm not saying it's bad. It's a conservative approach. Price then pulls back a little bit. It hits demand again, but doesn't take out the low. They get stopped out of their call positions, their long positions, however you want to say it. Price then goes right back up, takes the liquidity from the stops on the shorts here, takes the liquidity from those who are trying to trade to the upside. Prices push up into supply. And this trader then decides, you know what? I'm tired of watching it. I'm ready to go long. And guess what? They get duped again. This is a supply zone. This is a demand zone. What kind of news do you think happens in this zone? What kind of news do you guys think that happens in this zone? Good news, not bad news. Think about it. I want you to think like an institution. Upgrades. We're going to the moon. Yada, yada, yada. All right. Now, check this out. I coach in here over at Simpler almost every single morning. Okay. With my charts. And I let the ES futures be my guide into how we're going to trade. Let me show you the blueprint and the messages that we pushed out into Simpler for this type of trading. This is the higher time frame, folks, right here. I can't make this up. I put this chart out how many weeks ago? 2? Okay. In advance, folks. We were long here in our portfolios. That doesn't matter if it's ES, if it's Google, if it's Amazon, if it's J&J, if it's whatever. And as we approached this yesterday, I sent out a very important message to the masses and said, look, guys, this is the area where we pull up our stops, we get prepared for the move back to the downside. Now, what's important is for you to understand it not necessarily is it going to continue to the downside. There's other tricks that I teach you. But what I want you to understand is we anticipate the moves before they happen by using formations, by using the right mindset, by watching for structure where institutions may be, and then we line ourselves up. And if you know Mark Douglas, then you will know this quote. Gambling, people put their money in, they pull the slot machine, right? The handle, they wait for the sevens to line up. With supply and demand trading, folks, we line up the sevens, then we put our money in. That is the difference. So if anyone ever tells you that you're gambling, tell them you're learning. You're learning. You're not a gambler. We're just simply lining up our sevens before we put money in. Okay. Anyways, guys, I hit my 31 minutes right there. So from here, I just want to ask you, do you have any questions? Anything around the strategies that I use? Yeah. Yeah. So I use options, I use equity, I use futures, all of that. Yep. Yeah, I do, Craig. I have a ton of information out there. Yep. And I think Mirza actually had put something out there earlier. Yeah. So this was here in the Discord room. Yep. Jamie, I was here in the Discord room. Hey, I appreciate that. CAO. Yeah, I love supply and demand. OTA is awesome, man. Tell them, give them a shout out from me, man. I went to school in Colorado many, many years ago. Yeah. I do both directional or spreads. I love butterflies as well. Oh yeah. Oh yeah. I've been trading for many years now. So yeah, so that was a great question. Somebody just asked me about economic news. I love that. So I my favorite day to trade is on FOMC day. You know why? Because I'd love to show you how well this strategy works, folks. Absolutely. It is by far my favorite day to trade. I love it. Most traders don't have a process to be able to get into trades on FOMC. But if you think about it, folks, the FOMC events, what we'll do is identify the zones. Okay, and we identify them on a little bit smaller time frame depending on the day of the week. And then what happens is Jerome says something, say he says something hawkish, price sometimes will push right into a supply zone, and then it's right back down into a demand zone. Um, you know, and vice versa. But we just react off of these zones. Now I won't get into great detail how we trade the zones. There's ways that some traders just go long here with stops underneath if they're comfortable. But I have a whole different approach to it, which I find is the most mechanical approach to supply and demand trading, in my opinion. Yeah, so let's see, Matt W. Let's see, come up here. Let's assume today's ES candle closes down below yesterday's body. I know it hasn't closed yet, but just for argument's sake, how does that change your level for the ES for the week? So, one, what I'll tell you is if we're talking about today's ES candle, so the daily, Matt, or the weekly? The daily or the weekly? Okay, Cool. So let's go over there and take a quick look. And Mirza, just really quick, I know this was a 30-minute session. Is somebody supposed to be coming on right after me? If so, then I'm going to jump off. All right. So this is an inside candle. So how does that change things up? For me, if it were to close down, I would expect basically a look like this. Let me show you two different looks. It's kind of funny, like a hot dog. Okay, tomorrow, or continuation down into support. Okay. Now this is the same blueprint right here that I shared. And if you guys would like it, just to see how well it does, there you go. And then immediate support, we talked through this morning. We broke through that. We broke through relief bounce. These are your zones right here. Okay, this is your demand zone, and then on a 3 hour, we have a zone, and I'll show you guys this. Okay, right there. I'm going to create these zones for you, and then share the chart here. Okay, check this out. So I had to change the time frame to find the zone. Okay, so this up here is a supply zone. Tracking. Okay, just like that. And by the way, guys, we hit our target almost to the tick today. So we did really well as far as like the long-term approaches applied. Okay, just like that. And let's go ahead and take a picture of that. And I'm gonna share that with you guys in here. All right. Now there's ways to trade around this. Notice my automated level is working. We talked about this as well in our session earlier today. Now let me just go through the questions really fast. Good quote. I have several questions left. Where did the support zone on the screen come from? Drawing the zones, which candles? Yeah, Matt. So I use some Fibonacci for that. Let's see, Craig, do you have more YouTubes? I answered that. I sure do. I have like a ton. When you say we, which room? I answered that as well. Awesome OTA. Trendy Jon, where's the Discord room? Directional options or spreads? I do it all. How often does economic news, FOMC days throw off your strategy? It doesn't. I'm telling you, P.net, it is my number one day to trade, man. That's all I can tell you. It is no different. Matter of fact, what I love about it is that the news from FOMC data gets priced to our zones even faster. Do you know what I'm saying? So it's about the trajectory, it's about the speed, it's about the time is a variable in order to, trade off of these zones. Okay? All right, let's assume today's ES candle closed down below yesterday's body. I know it hasn't. I answered that, Matt. You guys are welcome. Can you tell us more about the Discord? It's a mastery. Things I'm trying to figure out which of your lines are from candle formations and which are fib levels. There you go, man. You figure it out. All right. All right, guys. So I really appreciate you. More and more information coming out soon. Thank you for coming here. I love to talk and I love to teach. I'm 8 minutes past due. Hopefully they won't get mad at me, right? But I love doing this. You got a long road ahead of you. I'm very, very transparent. It's not as easy as I make it look, but I promise you, I will teach you. I will lead you in the right manner for you to understand how to approach these levels. And always, my allocation of risk are the first things on my mind. Always. Always be comfortable with what you're trading with. It'll make trading a lot more consistent. Don't trade outside of your means. Don't be in a rush. This stuff will come to you. And you know what? You got a great teacher. I'm teaching you. I'm going to be able to, kind of fast track that for you. I've already done the hard knock stuff. So, anyways, I really appreciate y'all's time. Have a great one. We'll see you soon.